Alright everyone, welcome back to the channel for a quick update on the markets. Today I wanted to give you a brief update on Bitcoin. Not a lot has changed, so the main focus on today's video is going to be the next move for the stock market. I've got some new data to show you that indicates a total market crash is coming. Everything from the TA charts over on the stock market, some perspectives we haven't looked at before with the financial conditions, and also the news, which we will dive into first. So let's jump into the video. Starting off with the news, the major updates that I've got is what I've been posting over on my Twitter. Eurozone European headline inflation is up to 9.1%. This was previously coming in at 8.9%. We were predicting an increase up to 9%. But as you can see, we've moved all the way up to 9.1%. Very nice. Core inflation is hitting a new record of 4.3%, and this is terrible in places like Spain and Germany right now. So inflation in Europe is through the roof. Energy prices are through the roof, which is really why we're seeing these major jumps in not only headline CPI but core CPI. The only other update I would like to share is what Goldman Sachs warned, and that is that UK inflation could be peaking at 22.4% if we don't get energy prices under control, and this would be pushing us up to a near post-war record. So that is all I wanted to update you on in terms of the news. Like I said, I'll provide you a quick 1-minute update in Bitcoin. Not a lot has changed. Like I said in my previous video, if you have been watching my past two videos, this is basically what I've been predicting for. We've redrawn out this path that we're following right now, but something like this is what I'm looking at this moment in time. If we start, or I really only want to talk about the 4-hourly time frame, but if we look at the EMA ribbons, the long-term moving average on the 4-hourly EMA looks like it's going to be converging down to 20,500 very soon. Why is this important? This is where your 1.236 is, and we're currently range bound between the 1.236 at 20,500 and the 1.618 at 20,000. Just like we said in our last videos, this 1.618 at 20,000 is the decision maker, and while this decision is happening, you can see it looks like the 4-hourly EMA ribbons are catching up to us while we're lollygagging at this 20,000 price target. Why this is important is because the EMA ribbons are going to start tightening very quickly if we keep on lollygagging in this range, and this is going to mean that we're getting ready for a very volatile swing very soon. If we look back at the EMA ribbons, previous times that you've had a massive breakdown and you let the EMA ribbons consolidate into the price action, the EMA ribbons start to tighten. And if we look at these, the tightenings of the EMA ribbons on the 4-hourly time frame, whatever tightening of any EMA ribbon, when these tighten, a big move is coming. Depending on what direction or what side of the EMA ribbons are, you should either be getting bullish or bearish. We're to the downside of these while they've already flipped bearish a long time ago. So while these EMA ribbons continue to tighten, while we're just trapped beneath this 1.618 fib at 20,000, it's not going to look good for Bitcoin. So that's all I wanted to update you on. Once again, my immediate short-term price targets have not changed. You've got a 786 Fibonacci down here at 19,200, 2.618 Fibonacci down here at 19,000. So really keep an eye on 19,000 before we head down to my personal next macro price target, the bear flag breakdown, 18,200. So that's all I've got today for Bitcoin. Let's move on to the stock market segment now. I know a lot of people only come to my channel probably for my Bitcoin predictions over my stock market predictions, but before you tune off, I would like to highlight that this is the stock market in the past 3 weeks massively tumbling. This is Bitcoin in the past 3 weeks massively tumbling, so we know that the stock market's highly correlated to Bitcoin. And as you can see, 3 weeks ago we were predicting these tops in the stock market and hence calling for the top in Bitcoin because of these stock market fractals. So just letting you know, these stock market fractals, these stock market predictions are going to be correlated to what happens in Bitcoin. So stick around if you're interested. We're not going to be looking at this 2008 SPX fractal today. We're actually going to be moving on to a new chart. Let me show you what I currently see playing out right now. Let's simple this up a tiny bit, clear out a bunch of these drawings, and this is currently what we're working with. So you can see over on the SPX, we were forming a rising wedge on the 4-hourly time frame, and we've broken down to the downside of this. So my price target for this move at this moment in time, I'm currently predicting that we're going to move down to the bottom of the rising wedge. This is going to mean about another 5.2% correction down to 3,700. Now, this is not the major thing that I wanted to show you happening right now. What I did want to show you is, let's draw a Fibonacci from low to high in this market structure. You can see right off the back, we've got 1618 fib right here. And then if we move up our low, you can see we've got 1618 fib right here. So if you're wondering what these two orange lines are and what this orange box is now going to be, this is basically your double 618 Fibonacci from this market structure. You would really want to see that hold if you want to see the stock market go on another leg to the upside. Now, also, if you're an Elliott waver, what you can see and what you might be looking at is this bullish market structure, should I say. So you've got your 1 wave, 2 wave correction up here on the 3 wave. This should be your quote unquote 4 wave before an implied bullish 5 wave, pushing us up to higher price targets. Now, this is the problem with this. Let's look at where we are down on the 1 wave. So for this bullish market structure to work in terms of the Elliott wave theory, you would need to be closing your 4 wave above this green box, because in Elliott wave theory, if you didn't know, your 4 wave correction cannot come beneath your 1 wave. So technically saying, you know, beneath 3950 or 3950, you should be bearish, and the 5 wave count should be invalidated. So technically speaking, this pretty much is already invalidated. If you're looking at the 4-hourly time frame and looking at the candle body closes, you can see down here at 3925, 3925, that would literally be your last line in the sand. And if you do break beneath this green box, then you should in theory be magnetized to these lower regions down here. And if we come down to the 1-hourly time frame, you can basically see this is what we're doing. We're pushing beneath this right now. I'm not going to look at each individual wave count, but I have looked at these. You know, I'm not going to type out these 5 waves, but you can see very clear ABC correction. There's a 5 wave up into this 3 wave. There's a 5 wave up here, and then on your 3 wave correction, you can see this is very clearly an ABC. So everything about this would be indicative of your typical Elliott wave theory. Nonetheless, it doesn't look like it's going to play out. I will humor this and give a price target. Let's get a 1.236, 1.236. Let's mark this in orange. So this would be the implied target, somewhere around about here. Another massive move between the 1.618 and the 1.236. But this is currently not what I'm expecting. Like I said, in my opinion, because of this wave count, it seems like we're now breaking to the downside of this and we're invalidating it. But keep your eyes on 3,925. If you're a bit more conservative to me and you're waiting for a daily candle body close or a 4-hourly breakdown for this, then like I said, 3,925, that is the area to keep your eyes on. Looking at the mini futures for the SPX, the S&P 500 though, this would be where your 1 wave is on the 4-hourly time frame. And if we zoom in on the 1 hour, you can see this 5 wave would have been invalidated because we're beneath where the 1 wave topped out at. So looking at the mini futures, obviously it all depends on where the SPY opens and then where the SPX subsequently opens from there. But it looks like the S&P 500 mini futures are already saying that this bullish wave count is invalidated because we're beneath this 1 wave already. If we head over to the SPY has just opened. We're down about 0.5% today. It's really only recently just opened, yeah. So the SPY is kind of just hovering here. From yesterday's close, we were up at 395. We opened our pre-market down at 392, but now we're sitting at 393. So once again, on the daily time frame, you can see we're getting continuation. We're moving pretty far down, and with this gap in the price action down here at 392, round about where we are now, 393, I think we're going to get continuation to the downside on the SPY, especially as the bullish 5 wave count has been invalidated on the S&P 500 mini futures. So this is what I see. This is a new perspective that I did just want to give you a quick update on. But yeah, the SPX is not looking bullish right now. According to what we've got with this previous SPX fractal, we should be expecting a move to the downside, a move back up, and then a breakdown into new lows. And I am actually in agreement with this SPX fractal. Alright, so let's move on to one more market news update before we do head on to some of our honorable mentions. This segment is kind of like a canary in a coal mine, an early warning of danger, if you will. If you do head over over to Twitter at Financial Juice. I've sifted through about 100 tweets to find this one. But what happened yesterday, obviously yesterday was the last day of the month, and we had a MOC imbalance of 4.2 billion to the sell side. So not many people follow these, but you definitely should. They've been proven to, and clearly looking at the SPX, what happened yesterday, I mean, come down to the 1 hourly time frame, you can see we really started to push down with this MOC imbalance. Now, this simply means that going into the close yesterday that there was $4.2 billion worth of stock to sell. Because there's not enough spot buyers, this creates a massive imbalance, which, as you can imagine, puts a 4.2 billion sell side downwards pressure on the market. And that's one of the reasons why yesterday we were pushed towards a massive sell-off on the apex of the trading session, and hence why the SPX is opening bearish today, why the SPY is opening bearish today, and why the dollar is no doubt getting continuation, getting ready to push up to these 20-year highs once again. Alright, so I've got a few quick honorable mentions as well before we do head into our last major chart, checking out the financial conditions. This is a new data set that we haven't looked at before. This is the IFLQD ratio. But nonetheless, DXY, first honorable mention, we are getting continuation from this bull flag breakout. You can see we have now fully retraced 100% of the bearish breakdown from the 14th of July 2022. Quick update on this, 109.5. This is where you want to see continuation above today. If we do head up to 109.5 today on the DXY, that is another 20-year high for the dollar. With these new highs on the dollar, we can expect the targets that we've got at 111 and 112 to get absolutely slaughtered, absolutely wiped through the floor with. And what I mean by that is we should be smashing through them like they're not even there. Another thing that I haven't previously talked about is the fact that because there's a few different ways that you can draw this. Now, I actually think because of the amount of time that we've spent kind of lollygagging to the side now, there's an argument to me made this is actually one huge bull flag instead of just another miniature bull flag that we were looking at previously. The price target of this massive bull flag is up here, basically at 114. I think this is one of the most bullish price targets we've got for the DXY. Other than we have a cup and handle breakout right here, which yields us a price target up at 116.75. Also 1.618 up here at 111.5. So like I've been saying, this is why we've got targets at 111, 112. There's a lot of regions that I'm targeting over here on the dollar. Quick update on precious metals. Precious metals are getting absolutely slaughtered right now. As you can see, we've had an 11-year double top, and gold is looking to move back down to its next major area of support between 1,600 and 1,500. I actually made a post about this over on Twitter the other day. I posted what was happening over on gold and what was happening on silver, and you can see since I posted this, gold has moved down 1.6%, and we'll check out silver as well. I was talking about this BART pattern I saw over on silver, and if we look at this, I pointed this BART pattern over out on silver at $18.40. Silver is currently trading at $17.74. So from where we drew this out, 1840, we've had about a 4.6% correction. We're currently residing about a 4% dip since I made this post, and I think we're going to get continuation down to $14, which from where we are now, it's about another 21% drop. A lot of people may not know this, but as I am a Bitcoin maxi, I'm also a slight fan of gold and silver. It doesn't take a huge amount of my portfolio right now, around about 3, 4, maybe 4.5% after especially Bitcoin doing a lot worse than gold. But I do hold precious metals. I would be looking to buy more silver at $14. I'd be looking to buy more gold at $1,600 and $1,500. Moving on to the VIX. The VIX on the daily time frame is getting continuation, up 3%. Not a lot to update on this. Like I said, I've been covering this quite frequently. If you're new to the channel, warm welcome. You might have not heard of the VIX before. Well, all you really need to know is, because I've explained the VIX so many times, I won't explain it again, but the VIX is inversely correlated to the SPX. You can see spike in the VIX correlates to the bottom in the SPX. The SPX goes on a bull run. The VIX goes in a bear market while the SPX is in a bull run. And right now, I've previously highlighted this 2008 VIX fractal that I see playing out. This should be meaning that the VIX should get one last run to the upside, which should correlate to a move to the downside in the SPX, potentially a local double bottom before a breakdown in the VIX, which should correlate to a very, very nice bounce over in the SPX. And then the VIX should take a huge leg to the upside. And this could end up looking something like this, a beautiful head and shoulders over on the VIX with a massive break to the downside as the VIX moves up. Like I said, this was just a quick honorable mention. I don't want to do a deep dive into the VIX, but I am very bullish on the VIX moving to the upside, which means that looking at the SPX, I am also very bullish for this fractal to play out. Just like I predicted 3 weeks ago, this was the top. I'm expecting continuation. I'm also expecting a major bounce to start taking place in the next couple of weeks. But nonetheless, I still think we've got lower to go to the downside before that happens. As we're looking at the VIX, we're expecting the VIX to move to the upside, so we're expecting increased fear, increased volatility. Speaking of increased fear, let's look at the Bitcoin Fear and Greed Index. This is currently sitting at 18 in extreme fear. The other day, this was at 27. It managed to move down to about 23, 24 before I think it moved back up. No, it moved straight back down. So once again, yeah, we're sitting at 20 in extreme fear. This is the lowest reading that we've had on the Fear and Greed Index in the past at least month. I think maybe pushing up for about 6 to 7 weeks now. But let's move on to our last chart. I want to talk about the financial conditions and then we'll wrap up the video. So the IEF LQD chart, what is this? You probably haven't seen this before. This is basically one easy way to keep track of financial conditions. I've got a key to the left side of the screen which you can look at, and this basically explains what this means. As the IEF LQD ratio moves to the upside, this is indicative that there is tightening in the financial conditions, raising of interest rates, etc., etc. And with the loosening, you move to the downside. So when the IEF LQD ratio moves to the downside, this means that financial conditions are loosening. And it's very, very clear to see, or imagine to see, if you've got a basic understanding of economics, you'd understand how this is inversely correlated to the S&P 500, meaning that you've got a spike in the IEF, a spike, a spike, a spike, and these correlates to dips, 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 and probably another brutal dip in the SPX coming very, very soon. But as you can see, I mean, the SPX has been making lower lows, lower lows, lower highs. The IEF LQD has been making higher lows and higher highs. So as you can see, with the IEF LQD ratio going to the upside once again, in my opinion, this is because of all the bearish news we've had in the markets for the past couple of days, but we're going to see increased financial conditions, increased tightening. Just like Powell said about a week ago, expect more pain. They're expecting, you know, once again, an increase in these financial tightenings. And this is also reflected when we're looking at the US government bonds 10-year yield. This is, once again, getting continuation since Powell's speech. This is about to break up to new highs. I mean, if we look at the monthly time frame, when was it this high? It was last this high around about November 2018. So yeah, like I said, these are my predictions. A quick summary: Bitcoin 19,200 to 19,000. That's what I expect to happen for Bitcoin in the short term. Over on the SPX, I'm expecting for a breakdown to take place, but keep your eyes on 3,925. That is the area where I'm hoping for a breakdown because I'm a bear, but if you're a bull, you'd really be hoping 3,925 holds. If you break beneath that, you're done. The DXY is getting continuation. It looks like the DXY wants to push up to new 20-year highs. I won't go through all of the news articles that we talked about extensively, but like I said, DXY approaching 20-year highs. The VIX volatility is going up. Fear and greed on all different metrics are going up. Precious metals look like they want to be breaking down, and financial conditions are tightening. Expect a move to the downside for Bitcoin and the stock market. But that's all I've got for you today, my friends. Make sure to follow me over on Twitter at 618_cowboy. I have been posting a lot of charts and news updates ahead of some of my YouTube videos. I'll also keep you up to date on Bitcoin. But like I said, I mean, we've basically been having some choppy, boring sideways action. Not a lot to update. You know my price targets. You know where I think we're going. Send it. That's all I've got for you today, my friends. And as always, cowboy out. Peace.